You can stick with a hardwired strategy when it comes to investing. Choose the stocks you like one by one, or select Sector Spider ETFs and add the diversification of an entire sector of the S&P 500, like technology, with liquidity, all-day tradability, and transparency. Ready to add diversification to your equity investments? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
Welcome to another episode of Marketplace Minute. I'm DeLegge with ETFguide. Well, in today's episode, I'm going to do a portfolio report card for Andy. He is located in Cedar Grove, New Jersey. We're going to get into all the intimate details of Andy's portfolio on today's episode, and I'm going to give him a final grade of A, B, C, D, or F. Now remember, if Andy is able to get an A in DeLegge's portfolio report card, I bust out with my wallet and I pay him $100. That is a challenge that I send to all of our viewers. If you get an A on my portfolio report card, I pay you $100. You just have to be honest and also organized and send me your portfolio data so I can do a portfolio report card for you. So let's take a look at Andy's portfolio. Now, he's got 8 different investment accounts, which is a lot. We're just going to grade one portfolio, his TD Ameritrade taxable brokerage account. Now, he's 41 years old, he's single, he's self-employed, and let me just give you a couple of important details about Andy. This is what he had to say about his investment style and how he goes about picking his investments. He says, quote, "My investment style is aggressive. My goal is capital appreciation. And from time to time, I sold things that either did not perform well or just sort of settled in on a trading range for a while. Then I'd research investment ideas and buy what looked attractive to me." So let's get into the details of Andy's portfolio. It's a $108,000 taxable TD Ameritrade brokerage account. We'll look at the 5 key areas, beginning with diversification. Now, he owns 9 ETFs, 2 stocks, and 2 mutual funds. And his 3 largest holdings are ticker symbol PEP, which is an individual stock, and then 2 ETFs, PNQY, and then PSCT. He's got about $30,000 alone committed to those 3 positions. Part of the problem, though, and this is sort of a reoccurring theme with Andy's portfolio, is a lot of his holdings have what I call overlap, and it's needless duplication. In other words, he's got multiple ETFs that own basically the same types of stocks. Small cap, technology, internet stocks, and really there's no reason that he should be investing in a way that duplicates some of the same holdings. There's no benefit to him. The other problem is he really lacks exposure to some of the key asset classes besides U.S. stocks, which he has exposure to. He's missing exposure to bonds. He has no exposure to commodities or tips or real estate or emerging market stocks or international stocks. Wow, not very good score on diversification. So let's go on to the next area, which is risk. And here too, Andy has missed on the mark in terms of risk. I think he's taken way too much risk. Just his allocation alone, the bulk of it is exposed to stocks, and like I said, small cap stocks, technology stocks, internet stocks. If this portfolio is caught up in a market correction, he's really going to take a pounding. So on risk, I think he needs to do a better job in diversifying his risk, minimizing his risk. He can do that by broadening up his diversification. That certainly can play a role. And also having an allocation with less exposure to stocks and more exposure to some of those other key asset classes. Next up is cost. When we talk about cost, I like to look at investment portfolios that purposely and deliberately minimize investment costs to the maximum. And in this case, Andy owns 9 ETFs, which are notorious for having very low expenses. That's outstanding. Even so, some of those ETFs he owns have lower cost options. In other words, other ETFs that cover the same areas but at a lower cost. Finally, in terms of taxes, we want to look at investment portfolios that deliberately minimize the negative impact of taxes. Well, he does that. Number one, a good thing that I would say about this portfolio, Andy doesn't have a lot of trading activity, so that means not a lot of potential short-term capital gains, which are taxed at a higher rate versus long-term capital gains. So I think in terms of tax efficiency, he's doing okay. And also remember, ETFs are very tax efficient, meaning they don't have a lot of distributions annually that get shareholders caught by surprise with unexpected tax bills, so that's good. So I think on taxes he does okay. Last category, which is performance. So beginning in May of 2013, he started with $85,000 in his portfolio. He ended May 2014 with a balance of $108,000. That's a $23,000 gain that works out to a one-year performance gain of about 27%, which over the same period, the total U.S. stock market gained around 16%. So he outperformed the market by a little more than 10%. So that's pretty good, but at the same time, he took a lot of risk to get that outperformance, didn't he? I mean, he's been concentrating his portfolio in these areas that are very volatile, like technology, like internet, like small caps, and a rising tide lifts all boats. The opposite is true too. When that tide turns into a tsunami, this portfolio will substantially underperform the market when a market correction arrives. So my final grade for Andy's portfolio, he gets a C, which is not a very good grade, but at the same time, he now knows some of the weaknesses of his portfolio, some of the areas where he needs to work on: diversification, minimizing risk. Also, he could do a better job of minimizing the cost of his investments. And I think if he does that, he's going to put himself on the right track to reaching his financial goals, hopefully faster and with lower risk. If you'd like to get your own personalized portfolio report card, get in touch with me. @ETFguide is my Twitter handle. You can also go to etfguide.com and click on Ron DeLegge's portfolio report card. I'll pay you $100 if you get an A. And that does it for another episode of Marketplace Minute.